One of the questions I get when people go to retire is whether or not it's okay to have a mortgage on the house. For some it's okay and for some it's not, and I want to share with you in this video conversations that I have with them so they can make that intelligent decision about whether or not it's okay to have that mortgage. But before we get there, click on this button, subscribe to our channel, hit the notifications bell. I have over 30 years in this business, and I want to share with you some of these conversations so you make the right decisions for you. There is a common mantra, if you will, that I've heard over and over again from some of my folks who are about to retire, which is, I don't want to have any debt in retirement. Now, the interesting thing is, as I think about this seemed to be much more prevalent with my older clients, that they had this theory that if you had no debt going into retirement, you were much better off. And I think as I look back over the last number of years, I haven't heard it quite as much, though it is certainly there. And I want to talk about what debt is, both from an emotional and a financial perspective, and the impact it can have on you one way or the other. So there was a recent study done by the Employee Benefits Research Institute, the EBRI, and they took a look at about 2,000 people who were retired, and they put them into 3 different categories. The question they were trying to answer was, which one of these buckets of people, those who had more money, let's call it medium amount of money, and not a lot of money, okay? Which one of these 3 buckets found themselves in pursuit of retirement and found that they were more satisfied with the journey in retirement? And what the study showed was that those who had less debt typically found themselves in a way that they were more satisfied. In this particular study, they did find that those with less money had more debt, at least for those who were participating in their survey. So does debt mean that you're going to be less satisfied? Does having debt mean that you can't pursue happiness? Let's sort of peel the layers of the onion, if you will, and find out. Now, one thing I want to make sure is that you understand I'm not providing you with investment advice here, or whether you should or should not have a mortgage. I want to arm you with some of the questions that you need to be asking, things you need to be pondering, so that you can come up with the best answer for your circumstance. So I want to take you to my screen for just a moment, and I want to share with you the results of a 2019 Federal Reserve Board survey on consumer finances. And the question really what we're talking about is, should you have a mortgage in retirement? And what the survey showed was at the age of 65, 37.6% of folks had a mortgage. And by the age of 75, a number of them had paid it off, and it was now down to just a little over a quarter of the people had a mortgage. Now, with that in perspective, I want to sort of digress for just a moment, and I want to talk about debt, what it is, and more importantly, the difference between good debt and bad debt. So in retirement, I think bad debt is something that you really would like to avoid. Everyone, right? I don't want to have the credit cards that maybe, are charging me 12, 15, 18%. For some who have the car loan and they're paying 8, 10, 12% on that, all of that not being tax deductible on assets that are either depreciating or have no value. That to me is the definition of bad debt. You pay too much interest on it on an asset that is not appreciating. You really want to eliminate as much as possible that kind of debt. And as you prepare for retirement, you may want to think about accelerating your payments to get rid of some of that bad debt. Good debt, on the other hand, To me, a good debt is something where it's a much lower interest rate that could be tax deductible, like your mortgage, on an asset that will typically be appreciating. So one of the line items under the definition of good debt, I believe, is the mortgage. It is a very low rate. Let's call it 3 or 4% right now. It's tax deductible for most people on an asset, your home, that over time typically appreciates. So therein lies the definition of debt, good and bad. I'd like you to get rid of as much of the bad debt as you can. So let's take a look at the good debt, the mortgage. Should we have it? And let's take a look at both sides of it. Do what we would call the Benjamin Franklin. Okay? So for those who say no, I don't want to move into retirement with any debt at all. I don't want to have a mortgage. Here are the benefits of that. I've talked a lot about emotions entering into retirement, and here's one of those areas where it really holds true. That for those who have no mortgage, no debt, they feel an emotional safety. There's a safety net that regardless of what happens, they're okay. The house is paid for. They can sleep at night. And that is very, very important. It is not always important to maximize every dollar out there. It's more important to maximize the joy of the journey. And for many, that may mean having no debt. The second benefit of not having a mortgage is what we would call a safety net. What happens in the event of the what if? That we need a lot of money for something, or we want to have a lot of money to go buy the second home or the bigger car or the bigger boat or whatever it is we need to do, travel, doesn't matter what it is. And we may not have enough liquidity to take it from anywhere else. Well, it may just be that we could potentially, tap into the home in the event that we do positively need something. And again, this speaks to the emotional journey of feeling more satisfied and a better sleep at night, knowing that it is completely paid off. Finally, cash flow is a big benefit of not having a mortgage. If you don't have a mortgage, your cash flow will be better. If you have to pay $2,000, $3,000, $4,000 for your mortgage, then if you don't have to pay that, that's $2,000, $3,000, or $4,000 more in your pockets. And it allows you to pursue other things that you may not have been able to pursue before. So there's some very real benefits to not having the mortgage. So let's get into some of the benefits of having a mortgage. But before I get there, in my recent book, Don't Outlive Your Money in Retirement, we put together a 2-minute quiz. Really easy. Go up to the banner, hit the quiz button. I will very quickly get you back whether or not you're in one of the 3 retirement preparedness stages and whether you're ready to retire. I'll get you a free chapter of the book, a couple of worksheets to get you some clarity so you know whether or not you're on the right track for the next chapter in life. So let's get back to the benefits of having a mortgage. So some of my clients do want to put their money into, if we would call it, best use. They want to maximize the value of that dollar. And the conversation goes something like this. If I have a mortgage that I'm paying, let's call it 3%, and it's tax deductible. So maybe it's really only costing me, let's call it 2.5%. If instead of paying down the mortgage, I used money hypothetically to go into the market or my portfolio, the question becomes, do you think that you can get more than a 2.5% return over the long run versus having it cost you the 2.5% for the mortgage? If you think that you would be better off, or if you think it would be wiser to use that block of money instead of paying down the mortgage to get more than the 2.5% return over time, then the theoretical best use of your money may be to put it into your portfolio. But remember, the markets don't always go up. Sometimes they do go down. So you really have to have a long-term horizon on this and not look to just, if you will, make a quick score. Another common question I get for those who are retiring and maybe have their 401k or even have just gotten an inheritance. And the question is, do I pay down the mortgage? Just get rid of it. Now, we talked about, best use of money, but I'll talk about this in a little bit different sense. The benefit here of not paying down the mortgage is having what we will call, from a planning perspective, liquidity. You see, I believe it's always better to have money in your hands. If you pay off or pay down the mortgage, you will potentially have more cash flow, but if you don't pay it, you may have a pile of money, liquidity, that you could then use for various pursuits of different goals and not have to dip into other assets like maybe taking out a home equity line of credit or maybe even selling down some of the investments to go pursue some of your goals. Having that pile of money, having that liquidity is a benefit for many depending upon what your goals are. So the real answer is, it depends. This is where the planning really comes into play, because what you do in the planning, what you do in constructing your retirement roadmap, the journey, is to play out the different financial vignettes, if you will, see how the numbers work out, and then get a sense of how you would feel as a result of the different choices, and then make a decision that is best for you as you go about to balance both the emotional and the financial aspects of retirement.